Good morning traders, welcome to today's London session market review for the ICT Silver Bullet hour May the 23rd, 2023. As always in the London session, we'll be looking at the EURUSD Pair. Let's jump into the charts and see what we were offered today. Marked up the levels just so we've got a quick reference to start with. We can see we're essentially consolidating at the moment, so not much has happened yesterday or today. We saw yesterday we did run Friday's high and closed back within the range. Relative equal lows below us now from yesterday, coming from the London session to the New York session. So the end of the New York session tried to push down yesterday but was unable to break the London lows and take liquidity. Pulled back, putting in a swing high. Asia has pushed up today to try and take the swing high, has been unable to, and is closing back within the range. London currently made a small push up into this fair value gap. We can see that just before the silver bullet hour now, we are rejecting that. Given that we've not been able to take out this gap high and we are breaking lower, my eyes are on these relative equal lows here as a potential target. So that's what I'll be looking for. Underneath the relative equal lows, we've got a 15-minute fair value gap and a 15-minute order block. So there is confluence below these lows that we may get a reversal if that liquidity is taken. We'll mark out the 15. So that's our 15-minute fair value gap. Let's drop down the time frames to see if we can refine this any better. Refine this down a little bit, down to a 5-minute fair value gap. We really want to be looking for something within this price leg, displacement inside that price leg. We have got, closing this down, a balanced price range here, so big displacement bullish candle, yet we've got fair value gaps coming down, two fair value gaps in this area here. So we do have a balanced price range. I'm just going to mark it as a breaker for now within this area here. Let's continue down the time frames. Yeah, we've still got a balanced price range there. What I can see is a breaker block here. So there's one last push up before we take the liquidity down, which should signify that this potentially is a breaker block if price comes back down to this area. So that would be the last bullish candles before the break of structure lower, and then got raided. So I believe those would be classed as a breaker block. Let's refine this down even further. So 15-minute fair value gap in blue, and then this resistance area, breaker block area in the pink. So what we're looking for as the 10 a.m. UK time, so this is 3 a.m. in the US, what we're looking for, in my opinion, is a push to take these equal lows out, because we are bearish on the day and I think we need some liquidity in order to fuel any kind of potential rise. Now we can see that this consolidation that we've been in for the majority of the day, or the majority this week, yesterday and today, it's probably due to the fact that we've got lots of red folders today. So Euro red folders, Pound red folders, and then later on this afternoon USD. So PMI is happening all day today, which means we're probably seeing consolidation here until the US session when the PMI figures are launched out, which means we're going to have to be quite nimble on any trades. I'll be cautious of anything that we're taking. One last thing to note before we start scrolling through is we are currently bouncing around inside today's new day opening gap as well. So we've not been able to break away from the new day opening gap, we're just consolidating around it. Drop onto the 1 minute. Put in a high. We've had no break of structure on the 1 minute coming down. Just taken this swing low, but we're respecting this bullish fair value gap. Our eyes are on these lows here. Oh, instant. So the first candles coming into the silver bullet are bearish. So as I've said before, 5 pip stop, 5 pip take profit on Euro USD. I like to be in and out very, very quickly. Big displacement to the downside, breaking all of this structure. Our stop loss is taking us above the fair value gap and above the third candle or the first candle of the fair value gap structure. We are currently 1, 2, 3, 4, 5 minutes into the trade. 6, 7, 8, 9, another fair value gap, 10. So that will be my take profit done, close out for the day. If you're braver than me, as always, you could be running these lows, which is going to give you just over 10 pips if you take those lows out, bearing in mind we have the fair value gap and a breaker block below. Let's scroll forward. So we are leaving these fair value gaps now, which is nice to see. Hovering just above the liquidity, smash straight through. Now I believe this is the first news release, 8:15. Yep, so this is the French PMI that dropped. Having a reversal here within the fair value gap. Because we've taken this liquidity, if you were looking to go long, we're into essentially the ICT 2022 mentorship model now. We've had a breaker structure to the high side. Digging back in. Coming lower into the breaker block. That's our swing high. And 30, so 3:30, this is our release of the next. This is 8:30 UK time, German flash PMI. With those out of the way, the next one is 9:30 for the GBP. So we can start now looking for entries. We've taken sell side. We're into this breaker block from the bottom. 2 fair value gaps, no break of structure yet. So there's our break of structure. So because the silver bullet has already played out on this reversal, I'd be looking at this more as the ICT 2022 mentorship model. So I'm not going to be chasing fair value gaps going up here. What I would prefer is to wait for price to pull back into a discount of this leg, which means my preferred fair value gap would be this one here. What we can see here as well, if we zoom in slightly, is my favorite point of interest. Just below the 50% mark is this balanced price range area again. So a big fair value gap coming down, big fair value gap coming up. Where the two cross, we have this balanced price range. So that would be a nice area, nice confluence for a long in here. So I would go ahead, if I were to trade this, and set an entry for down here. Respecting the upper fair value gap here, we're not in a discount of that leg. We are now, so we've just got tagged. Let's just see if our 5 pip stop was good enough. We're rejecting off the fair value gap balanced price range area, which is good. A sensible person would have their stop losses below this low. With my trading plan, I am doing a 5 pip stop, 5 pip take profit, so we'll see how that holds up. Ooh, digging deeper. Rejecting, so we filled the fair value gap. Strong bullish candle coming out. Okay, so we're out there. Let's count how long we've been in here, because as we say, I'd like to be out within 10 minutes. So 1, 2, sorry, this is the first one. 1, 2, 3, 4, 5, 6, 7, 8, 9. So we're 9 minutes in, so we're getting ready to go break even here. That's 10. Full stops to break even. 11, 12, 13, 14, 15, 16. So it did take profit. We could have gone break even after that. So that's nice. So that's the second trade for the day. Silver Bullet and a ICT 2022 mentorship trade. The overall targets, now that we've taken the liquidity low, is obviously looking for range highs. So I will be looking for these nice equal highs above here, buy side. We've got a triple top on the 1 minute. And that would be my ultimate target. If I were to hold this, I would have been out by now. I would just close in full at the 5 pips. However, let's play it forward. So we've taken the swing high. Would have got you 2 to 1, which I know a lot of people like to take 2 to 1s, so would have quickly got a 2 to 1. Obviously with this one we would have easily got a 2 to 1 as well. And this is the end of the Silver Bullet hour, so we're outside of the hour. However, we can hold trades longer than this. Back into this fair value gap, back into drawdown now. Back into a lot of drawdown. This is just why I don't like to hold trades for so long. We'll come straight back into drawdown. I would hate to sit through that. So even though it's respecting the fair value gap, you've just got that 2 or 3 minutes of panic. Balanced price range here, so we've got push down, fair value gap going up, fair value gap coming down, so we have a BPR here. It's not touched, coming up, respecting the fair value gap above us, so we're just kind of ranging now. Bearing in mind we must be getting close, so 9:30, which is 4:30 US time, is our pound news. So we'll pull in higher, closing through. Is the drop of the news for the pound. Let's see how that affects. Taking the highs into the new day opening gap, swing high here, which we've taken. So almost a 3 to 1. Rejecting from the new day opening gap. And we would not have taken the sell, not have taken the buy side. So current price action has resulted in a big dump. We've not taken buy side out. Rejected from a swing high, respecting that original fair value gap that was created. Let's have a look here. So is that a breaker block? I thought this would have been the breaker block. 15-minute order block that we're rejecting from. So this bullish candle is our 15-minute order block, which we've tapped into that and then obviously rejected massively. So there would have been 2 profitable trades for me. You would be wanting to be quite nimble with your take profits on these because we've got such a lot of news going on, so I wouldn't feel comfortable holding these for any kind of duration. I hope that's useful. It gives you some reference points for levels to look at. Please leave any comments or questions down below. Like and subscribe if the video was useful, and I'll see you later on today with the market update for the US 500.